Welcome, welcome. I would like to welcome everyone to our show. I am Anthony Citrolo. I'm the founder of the NYBB Group and the Exit Strategy Lab. We work with business owners on exit and succession strategies and a path to selling their family owned business. This is something I am extremely passionate about, and I'm fortunate today to have as my special guest my partner and my younger partner, and also one of my the pathway for my exit strategy is my partner, Kyle Griffith. And just before I introduce Kyle, I wanted to just talk a little bit about the podcast. We call it the Firm Grasp Podcast, and it's really dedicated to helping business owners, mostly our family-owned businesses. We want them to maximize and realize the value of what is typically their largest asset, which is their business. In fact, statistics show that 80% of many business owners' real wealth is trapped in their business, and perhaps the business that was one that they started, or maybe a prior generation started, and they kept it in the family. Many families' retirement really rests on what happens with that family-owned business, and it's our job here at the NYBB Group with myself and Kyle and the rest of the team to help them turn that asset into cash so they can realize the benefits of the years of hard work and dedication. So the podcast is Firm Grasp on an Empty Bag, and it helps owners realize what makes one business more valuable perhaps than another business, and perhaps a way where they can really cash out with the greatest possible funds and the greatest possible realized benefit for the years of hard work. So as I said, today I'm proud to have my partner, Kyle Griffith, who is a little bit of background about Kyle. Kyle's a certified business intermediary. He has started a group called M&A, which is a group of very talented advisors who really attack and really attend to the merger and acquisition world and help clients really do what we were talking about before. And as I said, he's a CBI, which is a certified business intermediary. He's also the incoming president of the IBBA. He's the president-elect of the International Business Brokers Association. He has been a member of the Merger and Acquisition Source Marketing Committee, and he co-chairs the Member Engagement Committee for the IBBA. He holds, of course, a New York State real estate license. Kyle started with our firm a lot of years ago, and now is really probably as well known and probably also as effective as anybody in the industry. So Kyle, welcome. Thanks for being my guest.
I'm happy to be here, Anthony, and I really appreciate the introduction. I'm like blushing here, you know.
Well, that's okay.
I never think 12 years ago we would be having, this discussion. I can't believe how, time was passed. What I have noticed in the last 12 years, I think the loss rate of my hearers is faster than yours, So.
Well, I'm at a point where there's not much left to lose. I got a little bit on the side here, but funny, my grandkids go, they call me Poppy. They go, Poppy, you got a haircut. I go, yeah, it's kind of a permanent one. So it's pretty interesting. And you'll find, Kyle, that as years go on in our industry, as well as Kyle's a very a successful family man, has a great family, has 2 children, a beautiful wife, and spends a lot of time with them. And, we're in a business where you spend a lot of time. But what I'd like to do, Kyle, is just tell us a little bit about your evolution in the M&A space. It's a great personal story. I know we started 12 years ago, and what intrigued you about the industry, and like what has kept you so engaged?
Yeah, well, I initially moved to this country probably about 25 years ago. I originally came from Trinidad, and both my parents were entrepreneurial, but I came to the States, wanted to blaze my own trail. And as a business owner, you tend to try to want to do things on your own, right? You have your own way of doing things, and so I had some success and had some failures along the way. And a good colleague of mine told me about business brokerage. And initially, when I had that conversation with him, he was telling me that you essentially help business owners looking to retire, help them assess their business, evaluate, and help them get prepped for sale, and work with buyers in reverse as well, helping them find opportunities, and being essentially a matchmaker between both parties. And for me, initially in that one conversation, I was like, wow, I didn't know that this actually industry,
Yeah, sure.
existed. So I initially, when I first got in, I wanted to learn, how to grow a business, how to value a business, and hey, where are all these entrepreneurs that are growing and selling companies? I want to meet with them. So I wanted to, learn about entrepreneurial business as a whole. And then, I essentially got hooked. When I got in, I stopped all of my endeavors, and we still had the printing and shipping company. We kept that going. We started that back in '05. But
Hmm.
all my other entrepreneurial businesses pretty much put it on hold as to dive in 100% and learn the business. So I took some time to get my certifications. There's different ways you can learn the business through experience and through, actual
Sure.
foundational process in school. And so took some time to get my CBI and wanted to find the best company to work with locally here in New York. And at the time I came on board as a 1099 with Anthony and Tony, who are very remarkable, high integrity. I think one of the knacks a lot of firms have in the business is just the bad notion of business broker, and there's a lot of a bad connotation around that. So I wanted to find a firm that had high standards, high integrity, and found that with NYBB.
Sure, sure. I appreciate that, and you've really carried the mantle in terms of education. And the great part about it is, most of the folks on our team realize that, and they've gotten certified as a result of that. And I think it's really brought a great, tremendous impact to the overall team. And I appreciate you for that. And so, I really want to know you're kind of on the inside looking out a little bit, because you work with the M&A source. You do a lot with the Pulse report. And I was wondering, what do you feel about the state of the M&A marketplace today? And what do you think is going to happen if you had a crystal ball kind of going forward? Just give me an idea what your feelings are. I mean, you see transactions that have been executed. Kind of like the lay of the land to a certain degree. Not that obviously anybody can really predict the future, but I'm just curious to see what you feel about that.
Yeah, so there's a lot of activity. So essentially, what happened with the pandemic, there were sales that was supposed to happen in 20 and 21 that never really happened. Every year there are business owners that are looking to retire, and some businesses did well during the pandemic, and some did not. It's kind of interesting when you look at it. The companies that didn't do that well, let's say they expected to sell their business for 5 million, 10 million, whatever that number is, because their business didn't do that well, essentially they needed the funds from the sale to fund the retirement. So their sale of their business got delayed into 22 and plans in the future to exit. So, and there are companies, believe it or not, that did very well, that were planning on retiring and decide, I'm gonna keep going. We're doing so well. I'm gonna ride this wave. Some of that wave has been fabricated because with in certain sectors got a big bump. And we see a lot of liquor stores that did well.
Sure.
We see a lot of companies, DME firms did well. Staffing agencies, tech as well, with some industries that did very well. So there's a lot of opportunities in this space. 22 last year was a big year. We saw some high points as far as sales in 21, and looks like that's carrying forward into 2022. No one has a crystal ball for 2023, but there are some industries that are resilient and somewhat recession proof. So there's always going to be companies that are in a good position to exit. We've seen a lot of activity, buyers looking for tech-enabled company, which has
Sure.
been a big buzzword over the past few years. SaaS companies, but truth be told, it's tough to find good solid people to run businesses. So if you have a great business, great model, great key personnel, good books and records, and a game plan in place to exit, you definitely get a good value for your company.
And we've seen a lot. We've seen a lot of that. We have several clients that have had just fabulous years, and it really, it could really affect the valuation. It could. I'm not sure if it's going to be a permanent, permanent, permanent thing that's happened to the company where that valuation is going to be as high as it is, perhaps based on the last year or two. I know we've had some companies like that. But my question to you really is, what type of companies really are ones that you feel comfortable representing? What are some of the qualities that you can bring in terms of real value to them? And just talk a little bit, when you're prepping a company and you're evaluating, you're saying, hey, what are some of the good metrics to look at some of the companies, and what makes a lot of sense to you?
So there are a lot of metrics. We always say in our company, NYBB, that business is personal. I think it all boils down to the character of the owner, and also the character of the buyer as well. So you can have all the great metrics in the world, but if the owner is difficult, or their information is misrepresented, the metrics could be great, but how good is the data if the data that's put in is not good, right? So you have the metrics. Some key metrics we want to look at is EBITDA. Right now, private equity groups and family offices and buyers, they really get fired up for companies with 5 million in EBITDA and up, or even 2 million and up in EBITDA. So if your numbers is going towards that trajectory, you're definitely in great shape. Mm-hmm. The financials, though, only tell one picture. Is one of the biggest metrics, right? You can look at your EBITDA, your gross margins, and so on. A lot of benchmarks when it comes to financials, as far as your balance sheets and so on. It's a huge one. It's the very first thing that buyers look at. But there are other intangible metrics that people tend to overlook, and one of them is the risk factor.
Sure.
Usually the lower the risk, the higher the multiple, the higher the risk. Less of a multiple. It factors into the offer, and there are multiple different types of risks that are associated. So you have a great company, but if you have lawsuits, or if you have lawsuits from current or past employees, sexual harassment cases, or you haven't paid your rent, your lease, for example, and there's a potential you might not have that location. Your business will not be that attractive. Absolutely. Especially if it's location driven, right? If you owe your vendors, right, you have liens and so on. So there's a lot of risks, that involve. You want to make sure you have some good relationships with your employees and have some agreements in place. So if a buyer buys your company, they're rest assured that the employee is going to stay with the company. So having those stay agreements and some performance incentives, so it's a lot of risk. And then the other intangible is the growth opportunity. So you've done a fabulous job growing your company. You've done 10 million, but me as a buyer look at your company, can I get your business, to 20 million? Can I 10x your revenues? Yeah. Is there opportunity to grow your business in your current industry, or even pivot into other different avenues to grow your business? So those are the other things that buyers look at. Ideally, what they're going to do is they're going to pay for your business for what you have done, like historically up to this point, your goodwill, and any potential, that's just their profit of, they're putting money into your business. They're getting on board and running your company together with you for a short period of time. That's their profit. That's their incentive. Yep. That's their return on their investment, essentially.
It's interesting. I find that the buyers, even though they will pay for your net cash flow and they pay for your historical performance, when they look at the risk factors, of course, could be a detriment and could be a positive. There are a few, and it's interesting because they want kind of a game plan in terms of what the growth plan could be. And we've had a lot of owners who said, well, that is obviously their obligation if they want to grow the business, but they look to you, I say, Mr. Owner, as the incumbent to kind of give them kind of a roadmap in terms of that. So I think it's pretty interesting. One other story I wanted to tell, we for the audience, actually, we had a seller who had a manufacturing company. His name was Frank, and Frank had a great business, and he had it for 30 years. It was a family-owned business, and Frank said, "Listen, I have some great customers. In fact, there are 7 major customers for my firm." And he goes, "I've had those for 30 years," and we said, "Wow, that's great. You have 7 major customers," and he was doing a substantial amount of business, and he said, "My top customer, I have a great relationship with him, and he represents 28% of my business." And he thought it was just fabulous because, he can count on that person. They pay within 30 days. They order routinely. They depend on him. But, the buyers weren't so thrilled. Maybe you can just tell us a little bit. What do you think the buyer's thinking about in that case, Kyle?
I mean, you're looking at that one customer, and what happens if something happens? That customer walks away. I mean, that's money out the door essentially. Sudden value goes down the drain. So that's always
So
a challenge when you have a high concentration.
yeah, and then that's what happened, and that deal actually ended up being completed, but the buyer would not pay for the revenue related to that specific customer until it was earned. So it ended up being an earnout on that specific customer. And one of the risks we see are that concentration, and we see that a lot in especially some of the businesses here in the New York metropolitan area. Some of the ones that have been in the aerospace industry, some of them that have been in the medical supply industry. They do have some pretty major customers, And what are some of the real other obstacles that you see that prevent some of the owners from cashing out and getting full value?
I would say the biggest one I would say is personnel. I would
Mhm.
say if
And we're
like
in
for
a
example,
tough staffing environment, right? I mean, we're in a very difficult staffing environment. So, you said we referred before that somebody could have stay agreements. And, like if you have a client who is, let's say, an electrical contractor, what would you recommend that they talk to their staff about?
I mean, you and I did a deal not too long ago. We could even use a real life
Sure.
scenario where we were selling a how can we protect the innocent here? We were selling a contracting business, and one of the key employees was a good friend of the owner who passed, and they had that particular employee had some a special arrangement, and they also had some additional business on the side,
Yeah.
which affected that deal tremendously. I mean, the owner of the company, we eventually sold it, we got it done, but a lot of the value walked out the door because this one key employee um, was had some side business. I also worked on a HVAC company, and I could talk about key employees all day. I mean, it's essential, right?
Yeah, absolutely.
Um, we had a manager who essentially was running the business. The business was semi-absentee run. The owner was looking to transition to another career, and she had the business run by one of the managers. And we had a buy in place, offer accepted. During due diligence, the buyer actually offered this particular manager a really nice package, benefits package and everything. But there was no agreements in place. She actually did not favor the buyer at all. She didn't want to relocate.
Yeah.
And the deal actually went down. The deal didn't get done because this particular employee was essentially calling the shots, and that's what happened. So the owner had to come back out of retirement, so to speak. Yeah, he already started another career, came back. The business previously was run semi-absentee, so he kind of came back and had to rebuild the company because this one particular employee
Hmm.
was calling the shots. So I can't stress enough about taking care of your people, having some agreements in place, non-competes, and it's hard to find people and retain them. So when you get good people, you want to make sure that you can lock them up for a nice period of time and take care of them.
Absolutely. And the buyer wants to know that there's a staff in place. They don't want to have to rebuild the staff. So let's just switch topics a little bit. And I know you've been real successful in growing the business. I mean, I know you started a group called M&A, and I was thrilled to be a guest yesterday at one of your groups. And let's talk a little about M&A and what's the organization that you created, what you had as a vision, and what you think the benefit is, especially in a marketplace that we're in the lower middle market where people really need help. I mean, our clients are typically, let's say the lower middle market, we try to define it as maybe $5 to $50 million in revenue. We could do larger clients, we could do some smaller clients, but these are folks who are really in the thick of it. And you've created a great organization with some good people. Just give an idea what your vision was there and what you're trying to achieve, and maybe give people a little idea of what the organization is.
Sure. So M&A Network, we are a team of trusted advisors. We educate and consult with business owners that are looking to grow their company and grow with the intention to exit at some point. An exit can be an internal transfer to employee or a transition to family or third party. One of the reasons why we started this because there's a lack of education in the space of deal making, mergers and acquisition, and there's so many different components of it, and you need to have a good team in place. One of the challenges we have as a company, NYBB, we have clients that come to us and they're looking to sell their company, and they don't have an exit plan in place. They have not spoken with their CPA, their advisors, their attorneys, and so it's like, I know what I needed to create a platform where we can do multiple things. One, we can educate other advisors on different aspects of mergers and acquisitions. So the CPA learns a little bit about, legal contracts and provisions and so on, and the attorney, vice versa, learn a little bit, about, valuations, recasting, and the insurance professional can provide his insight, because all of these pieces, when you're getting the deal done, is very important. Right, the attorney reviews the contracts, CPA,
Absolutely.
CFOs does all the due diligence, the insurance, the benefits person reviews all the policies, and so on and so on. And the marketing person makes sure that the messaging is right as you transfer. So you spoke about key personnel leaving, you have to control the messaging within your company. So we have folks that do, M&A integration, IT, and so on. So we have a solid team of 40 advisors, and we assist and help companies that are preparing for a growth strategy with a potential sale in the long run. So it's great to have you join, and I believe we were talking about exit strategies yesterday in our meeting. So we have a great team, and it's all about education, like this podcast you're doing, Anthony.
Yep.
Getting this information out. We love educated clients, right? They
Sure.
can just they get it, they understand it. They understand the value of having good advisors working with them and helping and guiding them along. It's important,
Absolutely true. And, that's why when I talk, and I say sometimes tongue in cheek, I say firm grasp on an empty bag. We have a lot of clients who have great businesses, and perhaps they've run a tremendous business over the years. And if they have a couple of the items that really need to be put in place, not in place when it's time to think about exit, whether, they don't have perhaps a corporate attorney who's used to advising them on transactions, or if they don't have financial statements that are provided to them on a regular basis, let's say a monthly basis. So many of our clients are surprised when we say, hey, listen, we're going to go through this transaction, and they give us last year's tax returns, and we say, you need probably monthly financial statements. And they look at us like, wow, I've never gotten monthly financial statements. And we find that these are detractors in a lot of ways in terms of, overall getting value. And some of them are depending upon that money at the end of the day to sell the company. And so we want to make sure that the people like you have in the M&A group and some of the other folks that we've recommended over the years can help these folks kind of really get to the promised land, so to speak. And I think that's it's a great value that you've created there. So congratulations. I just wanted to talk. I know recently there was a nice transaction that was completed without perhaps being, still maintaining some level of confidentiality. I know it was a great transaction, which the owner wanted to sell the company. He had a building for sale as well. The buyer came in. I know he had some kind of financing. Can you just talk about a little the genesis and maybe how that transaction evolved? Perhaps how the marketing process went and how many potential buyers you brought to the table, and then what ultimately happened. I think it would be a good story for the audience to hear.
Yeah. So thanks for asking, Anthony. So we had what was a fulfillment center. So they essentially had products. They have customers that have products that they actually package and distributed on behalf of their customer base. The owner owned the property, and he had inventory. Most inventory there was actually his customer's product. We had, let me go back for a second. So, every engagement we bring to the market, we follow a process. We want to fully understand the business. That includes a business valuation. That includes understanding the marketplace, who the major players are, who is a good fit for the client, and the timing of the sale, and so on. So the timing was great. As far as the potential buyers, we put together a short list of candidates to be a good fit to buy the company. Some were competitors, some were not. Some were companies on the West Coast that we wanted a location in the East Coast, and so on and so forth. So between the larger companies and the competitors and the investors, what we found was, I guess you can call them investor, right? And in this case, we found two investors, very, very sharp individuals, very bright, intellectual, that wanted to invest in this company. We had, we got multiple offers. I can't remember the count of how many buyers we had. I want to say we had at least 40, I believe.
Sure. At least I think there were
at a minimum, and multiple offers for the company. Once we got to the LOI stage, one of the biggest challenges that these buyers had was getting their financing in order. And I can't stress the importance of working with great people and good advisors that really understand your situation. They had some advisors that were protecting their interests, but at the same time, didn't fully understand the business, and had
sure.
multiple questions that were previously answered and kind of dragged things along. One of the bigger factors was the financing for the company. There were certain things that need to get done before the financing could be put in place, and that slowed up the deal tremendously. I think one of the key things is that when you're trying to find advisors, there's some folks that tell you certain things just to win your business, and when it's time to execute, they fall short. And that's essentially what happened in this case. And but good, kudos to them. I have to give them credit. They were able to to pull it off and work through all the kinks, and we was able to get that deal done. And parties are happy. Our client stayed on for 4 months to help them with the transition, and he just recently ended that tenure as far as working there. But he still stays on to help them consult with the business virtually.
And the interesting part is, oftentimes, I know you've been successful in helping the buyer look at financing possibilities. And the benefit to that is that our client, oftentimes, who is the seller, ends up really not holding any kind of notes, right? I mean, so just explain a little bit how that works, especially some of it's SBA financing, right? And some of it, even when we're dealing with some of the private equity firms, they end up with their own investment and their own lending, which really resolves itself so that our clients, who's the seller, doesn't necessarily have to handle or hold much of the paper or the notes. Just explain to the audience how that works, because sometimes the misnomer is that perhaps the seller has to finance the whole deal.
Yeah. So, I mean, here's the thing. There are a lot of great businesses out there, and there's so many buyers. There's so much capital in the market right now. I mean, we had some bankers in the room, and we had some folks in our meeting yesterday, and even they were sharing to us that there's so much dry powder. There's a lot of money and access to capital that buyers have to buy deals. And there's a limited amount of deals. So if you have multiple companies competing against your business, number one, it can drive up price, and number two, you can actually take the terms of that arrangement. Now, that being said, that you have to have a solid company and have all the value drivers and have all of everything in your favor. If not, then you have to have some considerations. As far as financing goes, before we bring on any client, we want to make sure that there's enough cash flow to service a potential debt on a loan. Want to make sure that's attractive from a numbers perspective for any buyer. Once that's in place, I mean, depending on the type of financing, even on the smaller end, on the SBA side, the SBAs, a lot of times they have about 80% or even 90% loan to value. So the bank's looking for either 10 or maybe 20% equity injection, and that can come from the buyer. Sometimes they ask the seller to participate in that. So a scenario can be where the seller has a note of about 10% and the buyer injects 10% and the bank finances the remaining 80. But there are other, I mean, we currently have an offer for one of our deals that's all cash, from a public company, right? So there's different variations of that. I like to tell my clients, do you have the price and you have the terms? Unless you have a unicorn, unicorn meaning a business that has all the check marks everybody wants, you typically don't get both. So if your price is 20 million A buyer may give you 20 million, but you may not get all 20 right away. But they may offer you a lower amount, and you may get that, at close. So you either get the price of the terms. You don't always get both unless you have a fantastic business, which there's a lot of them out there.
And the sellers are always excited about a significant cash payout at close, so they don't have to retain any of the liability, or they don't have to wait for their money. I think that's what we find, that we try to accommodate them to the best of our ability. I always tell the client, look, if the business is what we call bankable or lendable, that's great. If it's not, you're probably the bank, right? So I think that's the way we look at it.
Which is not a bad position to be in. You can defer some of your taxes, and
sure,
you get paid interest. So this depends on what you're
do an installment sale. You recognize the business later on. So sometimes that works. But so in closing, Kyle, I have a couple of comments I'll make after you finish. But just maybe wrap it up a little bit and just give us an idea of what you feel are what today's family-owned business or private held company really should look for, and then we'll be at the end of our show, and I appreciate you being here. I appreciate your comments, and I think it's a real value to the marketplace out there to have someone like yourself who's knowledgeable, who knows, who's compassionate and passionate. And I think compassion and passion are probably two of the greatest qualities that you have, and I think we try to bring to the marketplace at NYBB. So just give us a couple of closing comments, and then we'll let you get off.
Yeah, definitely. And, I appreciate you, Anthony. I mean, you've built a wonderful company here, NYBB Group, since 2003. And you talk about passion, empathy. I mean, that's what our owners come to us for, right? They want us to help them sell their company, and you have to be able to relate to them and understand their circumstance. And you can't relate if you don't have that empathy and that passion for them, and the drive to help them get to that golf course, get to that boat, get to their family members and their grandkids, right? So, that comes first. As far as, the market, what I can share for sellers that are looking to exit, seek advice and reach out to your CPA, reach out to your team, your attorney, find out what you need, start putting a plan together. We can help you here. We can help you source advisors, and we also have some tools in place. We can help you enhance the value of your company. Whether you're looking to exit now or 20 years from now, you want to put together a growth strategy where down the road you can create a legacy for your family. There are multiple drivers that affect the value of a business, and you can start working on that now to improve the value. For buyers, my suggestion is, do your due diligence. There are a lot of onions out there. There's a lot of lemons out there. Get your team in place. Review those numbers. Check it once, check it twice. And over, and make sure. For the buyers that I've spoken with that have done deals, they actually like working with intermediaries. The deals that are represented. Most companies that are represented, the intermediaries, most of them do a very good job in vetting the opportunities. But yeah, there's a lot of businesses out there from the market. We are predicting this year to be a solid year. There's capital available, so. Yeah, I'll leave it at that, Anthony. It's a great opportunity for those in M&A space.
I agree. And for those of you who need to reach Kyle, he is he's at kyle@nybbgroup.com. You can find us on the web at www.thenybbgroup.com. And I wanted to thank Kyle specifically and especially for being kind of really bringing us and bringing the firm really into like 21st century, and really helping kind of grow the business. And just in closing, remember, I'll be bringing you topics that I feel hopefully are of interest regarding succession and exit planning, mergers and acquisitions, and topics that hopefully will help you and your family-owned business, your privately held company, realize your dreams, so you are not left with that firm grasp on an empty bag. So this is Anthony Citrolo. I'm signing off, and I look forward to seeing you next time. Have a great day and have a great weekend.
Thanks, Anthony.
Take care.
Thanks, everyone.